And we're live. How you doing, Jeff?
Excellent, man. Friday.
It is
Yeah,
Friday.
Friday,
I'm
as they say.
I'm excited.
Yeah.
It's pissing down here in Austin today. Oh
Oh,
well,
and interestingly, we
awesome.
got summer now. We've
Oh,
changed.
we've
We've
switched.
changed places. Yeah,
I
yeah,
like it. That's awesome.
yeah. Hopefully, it continues. I don't know. I can put the rubber boots away finally for the summer, but maybe not. I don't think so. Um,
Oh,
yeah,
cool.
par for the
Awesome.
course
Well,
out here.
yeah, absolutely, absolutely. Cool. So it's Friday. What does that mean?
Yeah, frequently asked questions Friday. So, well, yeah, drum roll, right? Yeah, FAQ Friday. So, if you have any questions that you would like answered live, please type them into the comments. But we'll go through some of the questions that I've gotten from sellers over the week, and we'll sort of discuss those. So, if that inspires any line of questioning, or if there's anything that you want to know, certainly drop them in the comments, and we'll get to those on in today's spot. Anything to add to that before we get to our first cue?
No, go ahead, mate.
So this is definitely something that's relevant to contemporary, events in the world here. But this could be anything related to seasonality too, if we want to keep it general. But with a growing business, is it difficult to evaluate sharp growth in a business?
Yeah, that's a really good question. Oh yeah, we're going through this right now.
Mm-hmm. Yeah, big time.
So, yeah, I was actually talking to a large investor yesterday. They set up a call with me to talk through our recent market data that we shared last week. And this Monday, I think we also talked about it, our June report. So they were asking some details about the market in general and how we're looking at this. So obviously, COVID's having a pretty big impact right now in businesses, but not just COVID. There's also other unrelated things. So not just protection equipment and hand sanitizer. There's all sorts of industries that are in disarray right now. So how is this being viewed? Well, the way we're looking at it is we're looking at the trend of the business pre-COVID and trying to make sense of what's happening now. So if your business, say last year, was unprofitable overall, and then you're profitable now, but only because you've been able to increase pricing or whatever because of the situation right now, that's going to tell a pretty different story than if your business was constantly profitable, constantly growing, and then you had an increase during this time. That's going to be different than if this is the reason your business is now sellable. That's going to be a really difficult thing to value from an investor's perspective because they don't really know what's going to happen next, right?
Mm-hmm.
So that's one way to look at it. How are you thinking about this? Because we've been talking a lot about this internally over the last couple of weeks.
Yeah, exactly. So I guess a couple things. If there's been a spike and the spike now is over and it's come back down again, has it come back down again in June higher than it was in June last year? Then we can see some year over year growth, and that spike is just kind of like it was a nice to have. If it's in the middle of a spike, it's like, again, it's going to depend on the category and it's going to depend on the buyer. But realistically, if you're in the middle of a spike in sales, it could be because that's just some of that's going to be attributed to the trend now, the consumer behavior trend to purchase more online. So we can't completely discount the spike. But this is why we look at 12 months and not 6 months and not 3 months. Yeah. We look at 12 months to have like a full cycle, hopefully. Yeah. But yeah, I mean, some of that trend, if it's already falling, where did it bottom out, and is it better than last year? in which case that I mean, that's the easiest scenario to be in, because we can sort of read that and say, okay, that was a spike to COVID, but the business is still in a growth pattern. If you're in the middle of a spike, we need to figure out, how much of this is really related to a consumer behavior shift, how much of it might be related to seasonality going into summer. Is there a spike this time of year anyway? It's just bigger. I mean, there's lots of factors at play here. It really just depends on the category. But yeah, I mean, it's hard to say. It's really hard to manage too, because you're bringing in extra inventory without really knowing how long this is going to last, right? When you're gearing up for your Christmas sales spike, you have an idea based on previous years of how much you should bring in. And so that, in January, you're not, still standing there with $1 million in inventory going, oh crap, it didn't all sell. You know what I mean? You sort of, you're able to see that. But here, we don't really know. So if a vaccine drops tomorrow and you've got $2 million of inventory, it's like, oh crap, now what? So we don't really know, and buyers don't really know either. But what they do want to know is that they want to catch some of this upside for however long it lasts for.
Absolutely.
So,
so I guess that's the same takeaway, right? You want, ideally, and just as you were saying that, I was thinking, how would I think about this as an investor? I think it'd be a really bad time to sell if you've only been in business 12 months or 18 months.
Yeah. If you've got some age.
If you've got 3-4 years of constant growth year over year, and then this happens, you've got some context. But if you're only a year old and you're like, whoa, this has taken off really fast, really bad time to try and sell right now, because you don't have anything for context. So the chance of you getting a really great outcome is low. Really, it's always low if you don't have full 2 years for year over year. But the longer that history is, the more confidence in the future, which we always talk about as well.
Yeah, like somebody would buy it, sure, but not for what you think you should get for it at this point, But so I mean, how is this spike evaluated? I mean, it's like, buyers need to sort of look within themselves and say, how much risk am I willing to take on here? And how can I share that with the seller? Because, we'd have to come to an agreement to say that, like, okay, this pandemic situation is likely going to go on for another year. So we should see some stable, elevated, but stable sales for at least another year. And I want to capture some of that upside. But if it does go away in 3 months and I'm going to, fall here, I'm not going to fall on the sword alone. Like, we're going to share some of that risk that, we'll agree on this, but if the business tanks, then we both make less. So, it's just trying to come up with some creative structure around it to make sure that the buyer's not assuming all of the risk.
And whether that's even worth doing. Like, in some cases, it's case by case, but in some cases, it might just be better to take that risk yourself and see what flows out of it. It might keep continuing to grow, and you might cash a lot of money right now. Or if the trend's the other way, ride it through and just see what happens. If you see the other side, or you start to see a turnaround, if you're down right now, you start to see that turnaround and it's better than year over year, you're starting to trend up, then that's a conversation. Hey, yes, that was a dip here. But until you've really come through that other side, there's always going to be, the buyer's always going to want to structure that into the deal. So either the deal will be smaller than you probably get otherwise, or there'll be some sort of shared risk scenario in it. It may not be worth doing.
Maybe not, especially if you're netting over these next few months the same as what you did in a whole year last year because of this spike. I mean, it might, take the cash and keep it rolling. And it wouldn't necessarily be the right time to sell. But if you're thinking that you're in the middle of a spike and it might all come crashing down tomorrow, and you're thinking, oh man, like I don't really know what's going to happen, I think it's a good time to sell. I just don't want to take any more chances. I want to get what I can for this. In that case, I mean, the same fears that you have going forward are the same fears that the buyer is going to have, taking on the business. So there is going to be some shared risk in the form of deal structure. So that's, anyway, there's a very long-winded answer there because there's There isn't really just one answer.
It depends. It depends.
Yeah.
We were on a call the other day, and you said, well, the short answer is no, you said both. And then I spent about 10 minutes saying what I actually thought. That was funny.
Yeah, and another question here. When do we choose a price?
Do you want to start on this one? This is a great question.
I know, and I can start, and we can really only answer this specifically to our process, I think. Yes. Because we do run a fairly involved process, that, you know, if you're going with somebody who's just listing it, I mean, they'll just take a quick look at the numbers, roll the dice, and say, let's ask for this. And if we don't get it, then we'll get this, you know, we'll see what offers come in. And yeah, okay, you could play that game, but we will, you know, like my first calls with the seller are very much seller oriented. Like, they're giving me numbers, and all I have to go on is the information that they have, whether that's looking at their seller board or whatever dashboards that they have, whether they do have accurate bookkeeping, whatever, or they just have their previous year's tax returns, whatever numbers that they have that they give me, that's what we are going to base our initial valuation on, that trailing 12 months of business. That's what we start with.
Yeah.
But that doesn't, I mean, that's just going on what the seller has at their fingertips, you know? So in order for us to be confident going into the market and you know, like starting conversations with buyers, we need to be confident that the business is what you say it is, because that's what a buyer is going to do. So we put the business through a complete business audit, a complete look at the financials, a complete look at the SKU level data. Basically, the other end of that audit will determine what multiples the business will support. Then we reevaluate things. We may find something in there that's a complete red flag that's going to say, hold on a minute. If we present this to the market right now, a buyer is going to see that, and you're just going to get lowball offers here. This needs to be fixed. You know, or there might be just a few things, a few minor tweaks that might say we need to pump the brakes here and fix a couple of things, or we might be good to go, or we might find hidden profits. The business might be worth more. I mean, any of these scenarios is possible, but we don't really know until a complete audit of the business is performed. Our process has this done up front, because this eliminates any surprises. If we're going to find something about the business that's a red flag, we don't want to find that out in the boardroom or video conferencing boardroom now in negotiations with a buyer that's going to interrupt or kill the deal altogether. And the other thing we don't want to find out as a surprise later, that the business was worth more, because they're not going to offer more, and they're certainly not going to disclose that information to us or whatever. I mean, you know, they're not going to say, hey, I think your business is worth more because we found this. You know, so we need to find those things beforehand. So we do a complete audit. It takes almost a month to do this properly, but then we know what value range the business will support, and then we can collectively decide if that's comfortable moving ahead with that, because sometimes it could be more, but sometimes it could be, we could find something surprising that might, you know, reduce that scale a little bit. But we can have those discussions before we go to market. That's the advantage of doing it this way. And I think by now, the years that you've been doing this, we wouldn't do it any other way. Why would you? Why would you wait for that surprise call from a buyer saying, hey, our finance team found this, we're pulling the deal?
Yeah.
And we say,
wanting to retrade and
I wish we would have known that before we went to market. Well, this is the way to do it. And it you know, might take a little longer at the front end because people just want to list their business, but you say it's slowing down to speed up later. Because once that work is already done, we know when we go to market 100% that it's worthy of being there, and it's going to support the multiple that we have in our mind. So that's another long drawn out answer to that question. But anyway, that was my take on it. But But if
Yeah.
you've got some detail to plug in there, please do.
Yeah, no, that's super helpful to give the background on it. Because, and then the best part is once we know the business inside out, we know what's the good and the bad. There's never a perfect business. So don't expect us to say, well, this is the best business we've ever seen. Like there's always going to be something, there's some room for optimization, there's something in the business. We just find it all up front. But once we go and present that properly and disclose everything that we need to disclose, and we go out to the right types of buyers and we go hunt them down, we don't just put it on an email and wait for people to come to us. We go hunt down the right type of buyers. Best thing is they bid on the deal. I was talking in our group and compete. So when we know when we price the business is when the person with the check writing ability prices the business, because that's the only person's price that matters. There's someone that can actually close the deal, right? I don't care what we think the business is worth. I want it to be within the range, but a buyer might think it's worth more. And why hold them back from writing a big check? Everyone wins. The bigger the check is, the bigger everyone wins. So why stop that from being an option? If you use a list price, it holds it back.
Yeah. It's not up to the broker to decide the maximum value of your business. It's up to the person with the bank account and the check writing capability, like you said. But yeah, I mean,
we've had a number of deals recently in the last 6 months that have gone above what we thought the business probably, if we were still using list prices, they've gone above, they've sold for above what we would have listed them for.
But I also think that it's worth noting that in these product-based, inventory-based businesses, you know, we talk about this all the time, but I think we just we need to keep reinforcing the message here is that the multiple does not tell the whole story. It's not always the highest price that wins out. Every deal comes with deal terms and structure behind it. And every partner or investor or buyer or whatever you want to call them that comes to the table has some unique reason for being there. They have some unique reason that they want to engage in conversations with you because they have a plan for your business, or they see something there that could be advantageous to them, or whatever the case may be. They also bring unique skills and unique leverage to the table. And that might be of interest, and it usually is of interest to sellers, but they may not come with the highest price. So I think, thinking in terms of multiple and thinking in terms of getting the highest price for your business, I mean, they sound good, but you're kind of focusing in on the wrong thing before you even go to market, and before you start entering in negotiations, and before you start listening to what they have to say. Because like you said, very often, like our process ends in a pressure cooker environment for buyers. They're pitching you, not the other way around. Because there's a competitive environment. So they need to come forward with it. Here's my unique skill set. Here's our plan for the business. Here is, the reason why we want to engage in these talks with you. They've got a plan in mind. And it's interesting to hear that out. And sometimes it's not the highest price that wins out, because there might be something more behind the scenes that's more advantageous to take less up front, but partner with this person or this firm, because they might be the ones to take your business to a higher level. And somebody says, oh, I can get you a higher multiple. Well, at that point, multiple doesn't really matter. If you're partnering with the right strategic investor who can really make things rain for you, I mean, that's that.
Or oftentimes the highest price, the highest sticker price, has the worst terms. Because they want you to say, oh, I achieved my highest multiple, but here's how you're going to get paid that out. And those terms just might not fit, or they might be outright shit terms.
Yeah. So just be careful about who you choose to have on your deal team, or who you want to advise you through the process, or whatever. I mean, just get information from multiple sources before you just decide to say, well, I want to sell to the highest price only. There's so much more to selling a business like these e-commerce businesses that are just so complex in nature. that there's too many layers to take into consideration other than just price, and you'll be surprised. I promise you that.
Absolutely.
Yeah. You know, these
and no
these
deal's the same.
no, and
deal's
these
the same.
intent, I mean, like
Yeah.
they're you know, these
Things
offers
that come
are
in,
like
you're just like, I've
pages
never
long.
seen that before.
Yeah.
Yeah. I'm constantly surprised. Yeah.
And if they're pitching you saying, here's why I want to buy your business, and here is what my team is, here are the other investments that we've made, here are our distribution channels, our unique levers that we're bringing to the table, and you might say, whoa, that's pretty enticing. I like where these guys, I like the vision that they have for my brand, and I think they're the ones that I maybe I don't totally want to disassociate with my brand anymore.
Yeah, exactly.
So price becomes less of a thing. I mean, when you're on the outside, you know, looking in on this, that's kind of all you have to go on. We're just telling you that there's more to the story that will unfold through the process, and you just listen to what they have to offer. And because at the end of the day, you have ultimate authority to decide who you want to sell your business to. So, you know,
we've seen clients literally go through the process with one outcome in mind of, let's say, complete sale. I just want out as fast as possible. Happy to do handover and transfer, but I want out. And through going through and meeting the types of buyers that we reach out to, they get really excited about the opportunities or see leverage in a completely different way because it's just something they don't know anything about. Maybe they get excited about staying in the deal. We've actually seen offers where the client wanted 100% out, but through the process, buyers have come across the table and said, well, actually, we want to use your company as the platform and we want to acquire other brands in this same vertical. Are you interested in going down that route with us? So you actually get to work with them on acquisitions, integrating everything. And obviously that's not for everyone, but depending on who the partner is, that might be really interesting. You know, you just don't know until you start seeing those conversations come across.
Yeah, exactly. And what you want or what the outcome will be might change. I mean, through once you start listening to offers and start listening to who, I mean, you've lost, you know, the flair for your business. A lot of sellers I talk to are bored, they're burnt out, they've lost that fire or their, you know, the desire to keep wanting to grow it. It's hard. It takes, you know, a lot of money to reinvest in the business to really bring it up. And they're just like, you know what, I'm tired of it. But when they start seeing other people excited about their business, it kind of, you know, re-energizes them a little bit to say, ooh, yeah, I do have something valuable here. And I, you know, if other people are excited about it, then it gets them excited about it again. And they start to sort of listen to really their plans and ideas and start to get excited again. So yeah, things are going to change along the way. It's not, I mean, if you want to just go ahead and list your business and get rid of it, there's certainly paths that will help you do that. But, you know, if you want to listen to what investors' plans are and you want to really get some competing offers for your business and start to really understand how valuable it is, don't put a list price on it. Get that audit done and start getting some competing offers and seeing what these investment groups' plans are for your business. It'll sort of re-energize you. I promise you that. That's, you know, it's interesting. And you just don't get that if you slap it up in a marketplace and wait for a buyer to call.
Nope, not at all. Yeah, the possibilities are really what makes it so exciting going through. And the other outcome might be you get a really great cash offer. We've got a full team. You don't need to stay on. We've seen that too. And you keep all your staff and contractors. We just need a week of handover. Show us what you're up to and we're good to go. You know, so there's infinite possibilities. And that's what keeps me so interested in doing this is the variability of what happens. You never really know until it's live and you're talking to people that can write a check. Then it gets exciting.
You could go and find a buyer who might make an offer. Okay, is it good? Is it bad? No idea. You could stick it up in a marketplace and wait a year, and you might get a buyer comes by once in a while, kicking tires and say, well, I'll offer you this much. And you don't really have any idea other than your broker put a list price on it. And you don't really have any idea. So why not get into an environment make the business prepared to be on the market, and let buyers compete, and let buyers pitch you on what their plans are for the business. And then you get to decide what the best outcome is for you, and not let the broker or anybody else dictate that. You decide which is the best person to do business with.
Absolutely.
Wow, we got a little bit fired up there. It's already 25 minutes into this. I don't even know if we should move on to another question or not. I mean,
I think that's a great jump off point too, because we've just talked about that. How could people reach out to get that set up for their business?
Yeah, absolutely. I mean, there's no commitment or anything like that to send me an email. sales@thefbabroker.com. Come straight to my inbox and just let me know what your plans are, or if you're thinking about selling, or even just want to know, what the market's doing, or what you can do to optimize your business for a sale down the road. Any of these scenarios, I'm happy to chat through. Sales@thefbabroker.com, and we'll arrange a time to have a call, and we'll go from there.
Yeah, absolutely. Awesome. Well, hope everyone has had a great week, and we'll have a great weekend ahead if you're not already there. I know some of our listeners are elsewhere, already living in the future. Awesome. Well, thanks everyone for watching, and we'll see you again next Monday. Thanks, Jeff.
Sounds good. Bye for now. Have a good weekend.